Welcome to Trading Lounge and the US stocks for the 26th of June. Today we'll be looking at Atlassian, GE and Nike. So with this particular stock here, we are looking at this complicated wave 4 correction here. So let's go in and take a closer look at this. It's certainly appearing like a wave 4. The problem is that we are looking at it with wave 4 here or wave 4 sitting here in this case. So what we need to do is we can have this correction sitting here for wave 4, and then this would be an impulsive wave moving up here. So we need to know where we can go long at this point and also where we can go short, because there's a possibility that we can move down here in 5 waves. So we need to be mindful of that, and we also need to be on the short side for that. So we're going to move into the hourly chart and take a closer look. So as I mentioned, we've got wave 3 up here, and we can look at this here as wave A, or even wave 4 here already in place here. It hasn't come down to the wave 4 of 1 lesser degree as such, but reasonably close. The move up through here counts quite nicely as an A and a B and a C here. Yes, it could be counted as 1 and 2 and then up for 1 and back for 2, but this move down here seems to look like a impulse wave to the downside. So we need to be a little bit mindful of that. And just to stretch things out even further in terms of counts, we could probably put wave 4 here as well as an A wave here, a B wave here, and a C wave here. A little bit short, I'd say, so, but it's possible with this. So in terms of going long, of course, we can go long above the high here, because then that would negate any bearish action at that point. But to get in a little bit earlier, we can use the levels. So first of all, we've got a medium level down here at 150, and we've got the next major level up here at 200. In between that, we've got group 2, which is 65, 72, and 80 here. So group 2, as you may know, supports the market when working with a large number, as well as group 1 above here. So when we're working with any number, in this case it just happens to be a major trading level 2 here, we look at group 1 above here, and that tends to, the first move above that will tend to be resistance at these points and sort of peg the market back to this level here. And then group 2 below here, 65, 72, and 80, they tend to support the market and hold it up into this area here. In terms of the bigger picture here, though, we would normally be looking at a level like this. We'd normally be looking at the arrival, the reaction from this level here, and then the first high above the level, and then an A and a B and a C correction. So within all of that, we're about here at the moment within this, and we're trying to work out this wave 4 reaction here, which would be the best way to look at that. So this is a classic trading levels patterns, and we're just in here at the moment with this. So just good to know where we are within this particular cycle with this. And let's just stream back in and have a closer look at this situation. In fact, we might even just go to the tick chart here where we can get a better understanding of this. I'll just get these there. So just before we go there, we could also trade short as well here, because in this instance here, this can be the ABC here, and this can be a appears to be 5 waves here. So wave 1 to the downside, and then wave 2 coming back, then wave 3, 4, and 5 finishing off in here, and then moving up from that point there. So we really want to be looking to be short at that point. We can also adjust this a little bit higher here, of course, so we could put it under this level here. That would be 176. So just put that there. 176, and let me put this in my spreadsheet here just to keep a track of things. So we've got a short trade set up there at 176, And also too, we want to be having a look at the long trade side here as well. So the long side here, I was thinking, let's just go to the tick chart here first. We don't have a tick chart on this. We've only got the hourly on this. There seems to be an error with this particular program here, but that's okay. We can still work with this here. So what I'm thinking here is let's just take this high here and this low here, because if the market was going to fail, it will fail from the 61.8% mark here, which would be just here, and that brings in at 182.50 area there. We can also have that at rounded off to 183, and that's an important level here too, because we've got the 180 here. That's a minor level, and then we've got sub levels. So the sub levels go 1, 2, and 3, 5, and 8 here. So it's the Fibonacci numbers between 80 and 90 here. So what I understand about group, about the 183 here, it's got 1, 2, and 3. If we get support on that this time around, and that would be above here, the 61.8%, then we could go long from that point. So just covering both sides here. As the arrival, there will be a reaction from the 183, and if it pushes up above it, we still don't chase that, we just allow that to play out, and we look for that ABC pattern here, and then we're moving up to the upside. So that's where that trade can come in here, and we'll put that, well, let's just remove that, copy that, and we'll put that just there, and I'll just shorten that there. It's a bit long for that, but you get the idea. If we get a tested support on that 183, then we can move to the upside from that point there. And from on the downside, just while we're here, between 180 and 190, we looked at the numbers 1, 2, 3, 5, and 8. We can do that from 170 to 180 there, so we can go 1, 2, 3, 5, and 8. And we know that 8 is part of group 2, so if that number 8 there'll be 8, there'll be, yeah, there's a group 2 in here, which is basically 65 here, 176.50 and 177.2 in here, 177.20 in here, part of group 2. Now if the 178 here becomes the retested resistance here, then you can also look to the short side there as well, but that would need to come down, bounce off that lock under there, and that first low below the level, put a point under that, and then if it breaks down there, then you can go short from that point. So I'll just leave it at 176 here at the moment, which is quite low, but it would still give us a nice third wave down to the 165 area through here for this. So we're going to monitor both sides for this. It's just that we're in a, we're not in an impulse wave at the moment. We're not buying a pullback in an impulse wave and so on. We're in a wave 4 corrective move here, and that gets complicated. But we'll just keep edging forward. Last time we spoke, we were looking for the first high above this level here, and then we would put that that one there on top of wherever that was above the 180 there, and that's where it is there. But we can get an earlier entry in that side and that side. And also too, if the market does move to the upside, then we want to be taking profit at the 200 here for that. That's our target there for that. There will be, it could go higher, of course, but all we're looking for is to trade to the next number and get out at that. But we would expect it to move higher from that point, but at least take a nice percentage off there at that point. So I'm going to save that, and we're going to look at, we can look at Nike next. So I've changed the count on Nike. This is how I've changed it here. And the reason I've changed it for is, and done it this way here, is that we could count 1 and 2 and 3 and 4 and 5 to here. But the problem is, then we need to look at this as the third wave here. And this third wave is too short in comparison to this wave 1 here. So I'm breaking it down into 1 and 2 and 1 and 2, and then 1 and 2 and 3 here and 4 here, and then looking for a move higher here for this here. So we're looking for, just looking for a move higher. Now, we did have a short trade on here, and we did get stopped out above the level there. So we did create a loss on that, but we need to get back on the horse, and we need to buy new highs. So we're looking at this here. In this wave 4 here too, this counts pretty well down as an impulse wave down there. So I'm a bit concerned about this. This could also still get a bit more complicated over here for this. But as it stands at the moment, if this was correct here, then we'd have this as an A wave, a B wave, and a C wave to here. But we're already breaking into new highs here. So that means that it negates this as a corrective pattern here. And that means that we should be going higher at that point. So we'd be moving up into higher ground here. So 1110 would be the minor level above the major level there. But also too, between 100 and 110 here, we have the Fibonacci numbers 1, 2, 3 as group 1, and then 5 is the midpoint here, and then we have number 8 here as well. So what we're looking for here, if you can drill in enough, is really we want to get support on 103. We want a tested support on 10. I'll leave it at that's about close as I'm going to get it at this moment. We want a tested support on top of that. If you want to wait for that, that's fine, because getting a tested support on 103 will push the market to 105. And at that point, obviously, will be double tops and never the end. So we'll end up moving up higher from that point. So we can look at this as 1 and 2 and 1 and 2 and look further to the upside. The other point about going along here really is that we always want to be on the right side of the closest largest number, and at this stage here this is support, and it's come back and tested it as support, so we need to see it push up from that point there. So we're going to have that there as a long trade. So that's currently well, at that particular price there, 102 and a bit. It'll be different, probably on different platforms a bit, but it's all in the same place there for that. And going to have a look at GE next, which is in a bearish move to the downside here. There's different ways of counting this, but what I'm focused on today is not so much any of this here, but we're going to have a look on the intraday and look at where we are within all of this. So everything's been working out pretty much spot on here for this. Don't need that there either. Don't need that. Keep as clean as possible. Now, it's possible that this count is wrong. I mean, this definitely looks like a fifth wave coming down here. You know, that's what it looks like to me. So, so this wave 5 here can certainly be sitting over here for this. But what we do need to see at this point then is we need to see this down here as an A wave, a B wave, and a C wave. And I can see that it needs further to go down through here. So what we can do is allow it to play out here and then look for support on this level and get the first high above the level, and we can go long from that point. But let's go in and have a closer look at this here. So might have to go to the tick chart. I'm not sure what I've got this on here at the moment. That's good enough. Let me bring in a little bit more data here so we can see what we've got. Still need to bring in more. So the move down here, we've been looking at this as an impulse wave to the downside, and then we look for the retracement level, and then we're looking for this trend to the downside here. So I do need to go back over this here. I need to sort this out a little bit, but I think I'm okay with wave 1 here and wave 2 here, and then I'm okay with wave 1 here and 2 here, and I'm definitely okay with this structure here of wave 3 here looking at 1 and 2 here, and all the way down for 3, 4, and 5. The third wave, fourth wave here should pull back around the 38.2% mark roughly from this point here. So we're kind of there already. This structure would need to finish off a little bit higher here, so it will probably want to push up a little bit, but that's okay. We're not interested in that. And then looking at this here, we still need to go wave 4, we still need to go wave 5, and then we need to go back to wave 4 again, and then we need to go down to wave 5 to make wave C here, if that's the case, if we're going to go back up from that point. So we need, you know, this is the beginning, this is the middle, and this is the end. We need this to come to here, to here, to here. And then for a trade, we need it sitting back on this level here. This is a medium level 650, and halfway between $8 and $5. And you'll see it play out here. It's an unusual number, $6.50, but plays out pretty much on all stocks really well. It could be 65 cents, $6.50, 6,500, all that sort of stuff, $16.50. So look, there's still a fair bit of time for this to play out here. We don't use the time down here to don't line that up with that. That's not the way to go. We need to count the wave structures as we go. And certainly not interested in trading any of this, but just shooting the breeze. And yeah, we'll look to see once this finishes here, if we get the setup over here, and then we'll look to go long at that point. Alrighty, thanks for tuning in. Much appreciated. Cheers.